Good afternoon, guys. Happy Friday. I hope you all made money this week. We have a lot to go over. Okay, let's take a look here. We're looking at the Q's weekly time frame. Normally we start out with the S&P 500. Today we're going to start out with the Q's. And I don't usually have this on the screen. I do use Fibonacci numbers. I don't think they're complete. They work really well if you can align them, or when I'm in my trading, I feel like if I can align it with something, another reason to use them, like moving averages or possibly support and resistance levels, or what have you, pivots. And so what I did is, I'm pretty bearish on this market. Those of you who know me, have been around for a while, I'm pretty bearish, and I'm definitely calling this a top until we start getting up there, possibly taking out this 276. For starters, we took out the 266.90 number from yesterday. In the scenario, the bullish scenario from yesterday's video, and if you'd like, go back and watch the video from yesterday as far as price levels and those kinds of things. But the bullish scenario from yesterday ended up playing out, and we found higher lows, which gave us the clue that higher prices were likely. And of course, the higher prices came. Whether the market rolls over from here, that's anybody's guess. I have no idea. I'm just, because I've been so bearish the market, and I'm calling this up here a top, I want to know what the bullish case is. And what I noticed today, something I noticed today, as soon as I got home and put the weekly time frame up and wanted to check out these weekly charts, it was kind of interesting to see these, what I'm calling now, weekly reversal candles. And I don't mean to be talking so bearish and bullish at the same time, but the thing is, trading's dynamic. We don't know what's going to happen. We want to know what both sides of the story is. And if we aren't aware of both sides of the story, if we aren't aware of it, we might not succeed as much as if we were aware of it. So we're going to dive into this. I went ahead and put Fibonacci, and check it out. I used the last pivot. I was going to use the pivot down here. In fact, we could use the pivot down here. The thing is, if I put a pivot up from down here, we would be dropping quite a while. Even a 50% retracement, which by the way is completely possible, and I'm not saying it's out of the realm of possibilities, but that's quite a ways to fall from current price. I want to be swing trading with closer time frames. I don't want to think ahead and try to predict a 50% pullback just yet. I want to trade with the trend. And what we saw is, we saw a trend, a blow off top. I want to call it a blow off top, although not necessarily. Maybe this was over here, back here in March, or in February, excuse me. So the thing is that it's possible, completely possible, that this is just a pullback. And as a bear, I want to know if it's just a pullback. And the thing is too, those of you who are in the Discord, congratulations today if you took all the trades, if you took the alerts. And by the way, guys, feel free to join the Discord. Go to rtbtrading.com, click on the link. It's in the description of the video. Also, the link to the Discord is in the video. I posted a bunch of links in the description of the video. Go check them out. And again, we're live Sunday, 5 p.m. Pacific Standard Time. If you guys want to come out and ask questions, technical analysis, whatever, any questions you guys have, we can try to go over those on Sunday. We'll go over stocks on Sunday. We'll go over your guys' watch list on Sunday. We'll do all of that Sunday, 5 p.m. Pacific Standard Time. So here's the thing is, what I did is I went back to the June pivot. It's one of the most recent pivots. Now, we could have went to the most recent one, which was here on 720. We could go back further than that. In fact, we could do Fibonacci's on all four of these on any point in time, going all the way up this rocket from the March lows. We could put pivots. We could put Fibonacci's on any pivot we would like, and you'll notice that a lot of times they kind of line up a little bit for the most part. Even if we went all the way back to 2018 and pulled Fibonacci numbers, you'll see how they kind of line up with price. Price likes to follow them. Okay, so QQQ pullback, 61.8% Fibonacci pullback. So the next one, NQ, which is the futures of QQQ, or the NASDAQ futures. Same thing, pulled it off of the June pivot, which by the way is about halfway up also, which is another reason, and almost the prior all-time highs. So So there's a few reasons why to pull it off of the June pivot. Ran it up, pulled it back. We've retraced 61.8%, and it's a weekly reversal candle. And I want to be aware of that as a bear, even though we took long trades this last couple days. You know, that's something to take notice of. IBB, which is biotech. This one's a little bit different. You see biotech's had a lot more relative weakness compared to the Qs over the last few years. And then coming into this year, it sold off a lot. And then, of course, probably vaccine-related news events coming in here. And so far, we've retraced off of the June pivot. We've retraced back 100%. And now, a little bit sketchy, I have to say, this last week. And by the way, I don't mean to sound like a bull all of a sudden. I'm just saying I want to know what the bullish case is, and I want to be a swing trader. I want to combine those two. I want to make money. I don't care which direction the market goes. That's the goal here, is to learn and to make money. And so part of this analysis is if I'm bearish and I think that was a market top, maybe it wasn't. Maybe this is just a pullback, and now we're going to keep going up here. Not to say we're going to take out the all-time highs, but it's in the realm of possibilities, and I want to be aware of that. So again, June pivot to the highs, pullback, and we'll look at this one. It is 61. It actually dropped below 61.8% retracement and then rallied back above. Not exactly the most bullish candle, but it is technically a reversal candle. And what will make it known for sure if it's a weekly reversal candle is we will know in the coming week. Now, it doesn't mean that price immediately has to rocket up here, taking out the high of today's closing print. What it means is price could still come down here and do a little bit of consolidation before rallying. What a reversal candle means on volume, mind you, what a reversal candle, in my opinion, means is that it's possible that we either consolidate and rally, or that we even rally, but it would point the direction of a new trend. Again, here's the S&P. Yeah, so here's the S&P 500. And on this one, I'm going to zoom in for you guys a little bit here. Okay, so on this one, we saw a reversal candle, 4 weeks ago, giving us the impression that we're going to see lower prices. Well, we did. It dropped down. It traded sideways, creating a bear flag. The bear flag played out. And this one also, from the June to the all-time highs, June pivot all-time highs, pullback 61.8% retracement. And this one also a weekly reversal candle. Let's go to the ES futures. Same thing. I'm zooming in the chart. And this one also 61.8% weekly reversal candle. Again, it would have been nice to see a green candle. Nonetheless, it technically is a weekly reversal candle, and it's the size of this wick is what makes it. The bull showed up and they pushed price all the way back up here, which would lead me to believe that this is a weekly reversal candle. Excuse me. Mind you, anything is possible. The trade war or Cuban Missile Crisis or whatever missile crisis that we've been talking about, the full moon effect, the bad news, anything can happen over the weekend or into the next week. I know. Elections are coming up, and coronavirus, and the Europe is shutting down, and the US is next to shut down. I understand all of that. For just a moment here, could we just set news aside, set fundamentals aside, and just conceptually think about it in terms of what if none of that was going on in the country? And for the record, it's not like we weren't on lockdown in March. We were in lockdown March, April, May, June, whatever dates that the states started letting people back to work. That was going on back then, and you saw the market rallying. So yes, I do believe the market would be affected if we were to go back into lockdown, but the market has been disconnected with reality for so long. It was well before the coronavirus that the market was disconnected with reality. The valuations on companies were insane, disconnected with what was really going on all the other things that drove the market down or up. Okay, Dow Jones. Get off of my conspiracy theory for a minute there. Okay, so Dow Jones transports. Same thing, June, about halfway up. It's a nice 50%. And then from that 50% pivot all the way up till current price, current highs, pullback, weekly reversal candle. I don't know about the volume. Maybe, maybe not, but definitely weekly reversal candle as far as the bulls showing up and pushing price higher. Excuse me. Okay. Dow Jones. I don't normally look at the Dow Jones. I don't like the Dow Jones. It's not representative of the entire market because it's such few companies. So I wouldn't say that it represents any kind of. It does represent a market. I understand its purpose, but I don't personally use it. But for this case, just wanted to look at it and see if it was affected at all. And yeah, you see the same kind of thing. You'll see a mid-June's pivot, and it goes to the highs and then pulls back, and this one was 61.8. SMH, the tech sector, June pivot up to the highs, pull back. This one was a little bit different. There's a lot more strength in this one that pulled back to 50%. XLF, one of the financial sectors, which we were calling one of the most bearish sectors out there, probably because of the interest rates and because banks don't know if they're actually going to get the money back from all the people that they're lending money to. Okay, so this one, the same thing. I'm going to zoom in just a little bit so you can blow it up on the screen. Same thing, June till highs, pull back well below 78.6, which is why you saw possibly why we saw a rally in the banks. TYX is a 30-year. And so this one's a little bit weird because in excuse me, in the TYX and all of the yields, we'll get into two more, and then two more yields, and then we won't look at any more of the yields. But with the yields, they started to paint a picture that excuse me, they started to paint a picture that the market was going to roll over because the bond market started rolling over before the coronavirus came into play, which kind of made a lot of people wonder why it was that the bond market or the yields were rolling over. Why is that happening? Why are we seeing lower yields? And then of course it rolled completely over and then tanked. And then this pattern here was technically a bearish pattern. In fact, I still would say that this entire pattern is bearish on a weekly time frame. But what I do notice here is it almost looks like, I don't want to call this a bottom, but it would be interesting to see what happens. You saw this last couple months, it's more of a bullish pattern. If you didn't look at all the prior months or prior weeks, and you look at these last couple weeks here, last few weeks, this is a bullish pattern here. It has a lot of work to do. The yields have a lot of work to do. And mind you, again, I don't actually think that the Fed is all of a sudden going to raise rates. I mean, the market would tank for sure if it tried to do that. I don't think the Fed is going to come out and raise rates, but maybe countries and institutions buying and selling bonds might raise the rates. 30-year yields. Okay, let's look at UUP, which is a proxy for the dollar. And it'd probably be better to use the futures for this, but just for the concept of this, we saw the dollar selling off. And then, by the way, I want to clear up something because it seems there's a notion out there that a rising dollar means stocks will sell off, and that's not necessarily true. And this chart paints a pretty good picture of that, because you can see the dollar has been rallying for a couple of years here, from mid 2000 or 2017, 2018 into 2019, 2020. And so you can kind of see the action from the coronavirus dump. You saw UUP snap there, but we've been rallying for a couple of years, and so is the market. Oh, and by the way, let's take a look at this. Pretty bullish week this last week. I would say that this is a bottom in the dollar. Well, it's a bottom until it's not. And we kind of were looking at this we were kind of looking at this pattern. This downtrend is not bullish. This could be a dead cat bounce, but as soon as it put in the low down here and started making this weekly bull flag, it was pretty good evidence that this thing was going to break out. Pretty good sign that it was possibly going to break out, and of course it did break out. I would say that's definitely bullish for the dollar. Skew, we won't look at the skew index. TLT, this is the inverse of the treasury, or the 20-year treasury. And I've been pretty bullish to TLT. I don't know what's going to happen come up here. Maybe this pattern is more bearish now that I look at it, but maybe it's bullish. I mean, the bond market is kind of a strange thing. We won't get into the bond market, but I want to believe that there are higher prices. This week alone made me feel like the weekly close was pretty strong. So maybe there will be higher prices in TLT. We will see. Let's go to GLD. I'm pretty bullish on GLD and silver. I would like to see, well, based on this weekly close, I'm going to do this. And again, as with the dollar, and then this is where the dollar, precious metals, and stocks don't always, and bonds don't always have to correlate, as far as a lot of traders try to trade. When the dollar is down, they buy gold, and when gold's down, when gold's down, they'll buy stocks. And it doesn't have to be that cut and dry. And as you can see here, gold has been rallying since 2017 into 18. And then, of course, you see it into 19 and 20. So sideways in 17, started rallying in 18, into 19 and 20. And the thing is that so was the market. So was the dollar. So to see all three rallying at the same time, that's pretty bullish across the board. But again, GLD, maybe we get down here to 171 area. In fact, I would say it's probable at this point, but I'm still bullish gold. This to me could just be a pullback. I would like to see this, maybe even all the way down here to 163. That's too far away to even like price target that. I'm not saying that's a price target. I wouldn't even say that this 170 is a price target. If it got down to 170, I'll be accumulating gold again. We won't look at oil. TNX is the 10-year treasury, and again, like I said, it looks extremely bearish. I mean, this is a bearish pattern, bearish leading into 19 and 20. And in fact, the market started reacting to these once the 10-year started selling off. The market started to react to this back then, and then it started rallying a little bit. And of course, you saw the 10-year. A lot of people say that the 10-year started rolling over before the coronavirus, but it's not necessarily true, because if you go back to the March low, or if you go back to the February sell-off, it was February 14th or 15th or 16th when we actually saw the market snap. And as you can see, first of all, the bond market was back here last year, started to sell off, and then it picked back up, and then it rolled over right around the new year. It rolled over. So maybe we started hearing about coronavirus in China. I'm not sure. We'd have to look at the news. I don't think so, though. I think it actually came right, like maybe beginning of January. Oh, maybe it was late December. Anyway, nonetheless, the bond market started rolling over before the stocks did, and before coronavirus, which is interesting. Tinfoil hat. Okay, so here's the other thing is silver, SLV, same thing. June, mid-June, all the way up to the highs, pulled back, and we pulled back to 61.8%. I do think we have lower prices in silver, even though I'm in a long trade right now off of the 61.8. I do think we have lower prices. If we have lower prices, I'm definitely going to be a buyer of silver. I think silver has a lot more room to run in a bigger picture compared to GLD. I think silver definitely has a lot more that it can run, and I think that this is just a pullback. VXX we won't look at. Okay, so here's the 5-year. Now, rightfully so, the 5-year is down, but of course, the 5-year, it had a lot of volatility back here last year around July. All the way through, from July all the way through the end of the year, really. But once the January part came along, it started selling off a little bit here, end of January. Maybe we started getting more coronavirus news, and then for sure, February 17th, the week of February 17th, and the week of February 24th, and then it just kind of snapped, and then has been selling off. Interesting that we saw a weekly reversal on August 3rd. We saw a weekly reversal in the 5-year. Again, I don't think that it's just that the Fed is going to raise rates. So anything that moves it at this point is going to be buying, and it's going to be institutions or countries, central banks. Last one we'll look at is VIX. VIX has been an interesting one, and I'm going to talk about this for a couple seconds here and just say this. This, of course, is the weekly chart, possibly weekly bull flag. So this is kind of interesting. This would disprove the theory that, well, no, you could have volatility in the VIX and not be selling off in stocks. Again, it's one of those things that traders have a hard time with. It's kind of a hard concept, and it was for me in the beginning too, is like, it just because the market is down doesn't mean that the VIX is going to always be down. We saw the market last week selling off, and we saw the VIX selling off. So that's the one thing, is that we can't always correlate it, just like gold and or precious metals and the bond market and the stock market and the dollar, and how they all affect each other. Sometimes it takes time for these things to actually impact each other, and sometimes they all rally together, sometimes they sell off together. The market is ever changing. Okay, back to the VIX. VIX, we see this where you can consolidate the VIX. This is why I love the VIX. You can consolidate it, and I believe I'm going to do this, and I've been talking to the guys about this lately. I believe the old VIX around, no, I wouldn't say around 850 anymore, but you see how the old VIX used to be 1850, and then that price turned into around $11 all the way through 15 or $11 to, let's say, 1350. It started, this was the new zone for accumulation up here. I believe now we're going to be in this accumulation zone for quite a while. So if the VIX, as the VIX keeps coming back here, I think you can safely accumulate the VIX if we're buying contracts that are, yeah, I don't know if you necessarily need to go as far as leaps, but maybe up to 6 months if you want to do, I would definitely buy some time, give yourself 4 or 5, 6 months, accumulate it at different positions. But I do think that we're going to be in this range. In fact, if you go back and look at the financial crisis, it took quite a while, quite like a couple to a few years for the VIX to really get down there and settle. So it's not everything. If it's not for you, it's not for you. But again, I did a Fibonacci on the VIX because I thought this was interesting how the VIX, but this time I pulled it from, again, mid-June pivot, which is between the March lows. If you look at the March lows up here, which would be the S&P March lows, and let me put it on this here. So March lows, and if you pulled it down here, right around here is around 50%. See that? It's inverse. It's almost inverse the percentage of the where we put the Fibonacci on SPY and all the charts we just looked at. This drop from the March lows down to the June pivot is around 50%, and it also is on the VIX. And then from the VIX, this June pivot all the way down to the lows, and then the pullback would be, if I zoom out like, let's do this. The pullback, as you can see, so when we ran all the way down here, we rallied all the way down here, and then we rallied all the way back up here, or we sold off down here, we rallied all the way back. It pulled back all the way up to 78.6% retracement. And don't get me wrong, I understand that this price action right here is definitely bullish for the VIX. But again, it's the VIX. It could just do, it could just fade from here. It'll take a little bit of time. Okay, I'm going to leave you guys with this. I know I've given you guys all the bearish case scenarios over the last couple of weeks and market top and all this, and I totally understand that. I believe that. And but Patrick, you said the market was going to sell off for the next year. So here's the thing. I didn't actually say that, but here's the thing. It was a weekly reversal candle up here. Yes, this is a market top, and I'm not taking any of that back. I believe this is a market top. I believe this was the run up. This was the run up to get mom, brother, family, dog to buy the stocks, and then the institutions sell it off. And as retail traders keep trying to pick the bottom. Now you don't really need to pick the bottom. You could just, this is the bottom. This is the new bottom. Until we take out these price levels, if we get rejected off these price levels and then roll over, that's absolutely possible. In fact, it's possible Monday we take out the lows. Who knows? I don't know. I don't know what the probabilities are of. I would have to say by today's close and what happened today in the last 2 days, I would have to say I would be leading to believe that there are higher prices this next week. But I'm not saying take trades off this. I'm not saying go ahead and trade this. I'm just saying, being the bearish case scenario person that I am, especially how extended we are off the March lows and all the fundamental reasons, we were looking for this top. The top happened, but a top doesn't have to last 3 months. A top doesn't have to take out the March lows again. A top can just be a top for a couple weeks, for a few weeks, or maybe it is. Maybe this is a top and we'll never get there again. By the way, let me part of that is damage has been done to these charts, right? Price ran up and got rejected and pulled back or sold off. Damage has really been done to the chart, so it needs a lot of work. However, these are weekly reversal candles, and we have to, as bears or even as bulls, we have to accept that and understand that and see the other side, the other case, to be more successful. That'll wrap it up. I will see you guys hopefully on Sunday, 5 p.m. Pacific Standard Time. And by the way, if you agree with this or not or whatever, just leave a comment in the comment section. I'm kind of curious to what your guys' viewpoints are on this. If you think my idea of putting the Fibonacci's on June pivot instead of the March low pivot, if I'm crazy, leave a comment under the video. Talk to you guys soon.